Hello and welcome to Kya Lag Raha hai Market, our daily program on Nifty, Bank Nifty and Dollar INR. What do we do it in this thing? We look at charts, open interest analysis, FII data, and we try to form an informed opinion on what the market is likely to do tomorrow. We also suggest some limited risk option strategies and sorry. And we try to figure out how to react to whatever the market does in the next few days, right? So without further ado, first let's share our yesterday's analysis and see what's up next. So we talked about why Nifty is approaching a resistance zone of 100 EMA and the bottom of the COVID trend line. The breakout is confirmed, but we may see some consolidation and loss of momentum. We said that Bank Nifty is strong. It is above 50, 100 and 200 EMA. We said USDINR continues to be bearish thanks to a weak dollar, but largely flat today. We talked about why 17,800 could be a support, 18,000 could be a resistance, and FI mixed signals all around. We said why market can take a pause around 17,900, 18,000. It could likely test that zone, and we'll have a most probably we'll have a neutral expiry between 17,700 and 18,000. And we said one decent idea to do this time is iron condors, right? Because we are expecting a neutral expiry. So let's look at what happened today first, right? The first thing, of course, is Nifty chart. So this is super interesting. We had drawn this horizontal support somewhere around 17,650, 17,700 zone on the futures chart of Nifty futures some time back. And you can see today that the bounce happened exactly around this zone, around 17,650-ish on Nifty futures. So this zone is a support, right? So 17,650, 17,700 is a zone of support. Also, you can see that there's a huge, oh, why is this acting so weird today? I think there's dust on this thing. You can see that there's a huge rejection wick here. What is the rejection wick? This thin line you're saying, it's called a wick. So basically, price is rejected from there and people have not allowed the price to settle it down here and it has gone up here, right? So this is point number one. Similarly, if you look at Bank Nifty, we had drawn 41,900 earlier as a support, as a resistance. Now it has become a support. Also, there is 100 DMA there. So let me just zoom in a little bit so that you can see it more clearly. Bank Nifty went down, took support at the 100 DMA, which also happens to be the previous swing high of somewhere around 41,900 types. And it bounced from here. There's a huge rejection wick here also. This is the rejection wick. What it basically means that people did not allow price to settle down below 42,300 types, right? So both of them have bounced clearly despite a dip, number one. And yesterday we were saying, right, we don't know how the test will happen. It can happen like this. So yesterday we were saying towards the close of this program that from here it can happen as a, yeah, it can happen as a, right? It looks like it is consolidating first before going up. It is still a buy on dips market. It is still a bullish market. Especially today's rejection is a proof for that. There will be resistance at around 18,000 for sure. But this is not a market to short into because even today's momentum downward did not sustain and the dip was bought into and Nifty went up, right? Now let us look at open interest analysis. Dollar is largely right where it was, flat. Although on spot charts, I'm sorry, on spot charts you can see that this is what this the futures chart on futures chart you can see that there's a bearish engulfing at the bottom of this downtrend and there's a trend line here. So there's some tussle here. In fact, if it goes below this level, which is somewhere around 81.90 and sustains there, I'll be very, very happy to short dollar very confidently, right? Right now, shorting dollar is a little tricky, but for sure, if it goes below this level, uh, somewhere around 81.90 on futures, it's a very easy shot. Um, so now let's go to uh, open interest analysis, right? Now, open interest analysis, if you look at the entire day, says one thing, right? So if you look at the open interest analysis of the entire day, you can think that 17,700 is a huge resistance, therefore short kar do 17,700. But that's not how you have to look at it. Because if you look at the last 3 hours of action, there's a lot of put writing at 17,700. So initially, basically, after the initial uh, call writing, there was no real call writing. After the initial put unwinding, there was no real put unwinding. Even if you look at last 2 hours, right, there's a lot of put addition at 17,700. If you look at the last 1 hour, again, lot of put addition at 17,700. So if you look at the full day, it's going to be very misleading. I think the number to look at is the last 1, 2, or 3 hours, which you can see here. And you can see that last few hours, it was a very bullish kind of a close from open interest data. Again, option chain is very divided. PCR of 0.9 is very neutral. So it's clearly not a market which you have to sell into. In fact, I am of the opinion that this is a buy on dips market even now, right? Because the PCR of 0.9 is not at all bullish. And if you look at the hourly data, um, it can it's very believable that market is going up. Now we'll also look at IDC live option charts. IDC is an internal code name we use. Yeah, you can see this, right? If you look at PCR, interesting. So PCR dipped immediately at the start of the day, but after that it has not really dipped. It has actually closed slightly above. So if I include the 15 strikes, you can see this, right? After the initial collapse, PCR has steadily gone up, and this is a sign that Nifty might not be very bearish, right? So there's still a buy on dips play. Now let's finally go to FII data. FII data is interesting. 17K calls bought, 11K puts bought. It is net slightly bullish to neutral, right? Bullish bar neutral. This is not a bearish data. This is either bullish or neutral. But if you look at futures data, 700 crores, this is bearish. Stock data, 500 crores is insignificant. But overall, OI has considerably gone down from what used to be triple digit 130, 140 kind of number to just 36K short future OI. So basically, FI data is kind of mixed on option versus future. Momentum on this thing is with bulls. So let me, sorry, this is, let me remove this because I didn't delete yesterday's data. Sorry. Um, so, um, so basically, option chain 17,700 has a lot of put writing in the last 3 hours. 0.9 neutral to bullish. This is again bullish. FI option data slightly bullish. Why? Because 17K buy, 11K sell. It's 17K call buy, 11K put buy, slightly bullish. FI futures data 700 CR sell is mildly negative. FI stock data 500 CR not significant. Buy on dips for a target of 18,000. Range bound expiry likely. Sell near 18,000. Range bound expiry between 17,700 and 18,000 likely. But I won't advise this simply because it can be a breakout after 18,000. So my trade is still the same. Either bull put spreads with 17,700 put sell, or iron condors of 17,700 put sell and 18,000 all sell. Right? This is our read on this. Pratyush is saying bullish market ahead. Pratyush, even I think there's a bullish market ahead. Prabhanjan is asking, is there a way to switch between million and crore? Yes, I think I'll just add a setting. We'll add a setting for that. How to use multi-strangle chart? There is a video on that. Uh, um, okay, so basically, right. Long story short, here's the thing, right. So I'll give you one conspiracy theory, which is conspiracy theory because what it has to be fun sometimes, right? See, I personally believe, right, and this is not advice, this is just my belief. Don't trade based on it. But of course, if you find corroborating evidence to this theory, please give it some weight. So my theory is that Nifty is going to make a new all-time high. Right? It is going to cross 19,000. Perhaps it might even hit 20,000. Who knows? After which it will correct. Why? There are multiple reasons why I think this. See, because all this banking crisis and a lot of structural banking problems, etc., US is going to play the lower interest rate game. But at some point you have to it's like a game of chicken, right? You can't always keep on speeding towards the end. At some point you have to take stock and say, okay, now we have no option but to raise interest rates. And when that hits, I think Nifty might give a tumble, and maybe we'll see a much lower level somewhere in 2023, 2024. Uh, so my larger meta is, see, you can ride Nifty for the next 1,000 points, maybe, right? If this holds, right, 18,000, 19,000, but maybe 20,000, who knows, right? But after that, I think that's it, right? If I ever see 20,000 Nifty, I'll empty everything, any exposure to equity. I'll sell dur dur ke 20,000 calls or short Nifty futures even, and sit on it probably for uh, quite some time, right? And I think um, now is a good time to put all your money in interest rate bearing deposits, whether it is FDs, G-Secs mutual funds, etc. Because the reason why I'm saying is this, right? So let's say Nifty is around 18,000. You make 10% on Nifty. Uh, that is close to 19,800 or 20,000 Nifty types, right? Let's say Nifty doesn't move beyond 20,000 in the next 2 years, then your fixed income instrument is actually outperforming your uh, equity. In fact, I'll give you an even bigger problem, right? In 20, so let me just write it down, right? Because it's kind of difficult to put it with a. So in 2021, and people who have been watching this thing would definitely know what I'm talking about. In 2021, somewhere around August, is the last time I invested in Nifty. Right? I basically cashed out everything to a combination of FD, GSEC, and GSEC mutual funds, which are FMPs, fixed maturity plan, MF. Now, if I'm making 7% on this every year, my portfolio is probably up 14%, right? And somebody who invested in Nifty since that time is probably down minus 2%. Now let's fast forward to 2024 April or August, right? This is at this time Nifty was around 18,500. Now by 2024 August, I would have made 21% on all this pre-tax, right? And somebody who invested in Nifty has to make 21,000, 20% return pre-tax. For that, that person has to do 18,000, roughly 3,600 points on Nifty. Now that is how much? 19,000, 22,000 Nifty. In fact, right, unless Nifty crosses 22,000 by 2024 August, I am so happy that I am not in Nifty and I am in FD. So now approach it similarly. Look at it this way, right? In the next 2 years, what do you expect of Nifty? If you ask me, I don't think Nifty is going to cross again. Or this is not advice. This is not trading yarn for tomorrow. This is just giving a flavor of what I believe lies ahead, right? And please take it with a pinch of salt. I'm not. Nobody can predict where the market goes, but from the current level of 18,000, do you think Nifty will go up another 15% in the next 1 year? If you don't think Nifty will go up 15% in the next 2 years, 2 years rather, then you definitely have to be in fixed income, right? By fixed income, I mean interest rate, right? Of course, I'm not considering tax treatment, etc. Because if you hold it for longer, low LTCG, STCG, but we are just looking at a 2 year horizon, right? And if Nifty goes down or stays flat, obviously this is going to perform better. So basically, my read on current Nifty is that this is not the time for doing any kind of long term investing in Nifty. I'd rather not do long term portfolio in Nifty. See, if you want to play, you can play the upside till 19,000 or probably 20,000, but this is going to be the last leg of an index which is just about to correct. This is what I'm afraid of, right? So I'll be happier to not have a very big exposure to equity markets at this stage of market. Uh, but then, yeah, this is just a theory, and I think we might see one more all-time high. So I would definitely not short here, but I won't also try to build a long-term portfolio at this point simply because I don't think there is a huge upside in Nifty left in the next 1, 2, 3 years, right? Anyway, that's our theory for today. So this is it. We'll see you again tomorrow. So till we meet again, please take care and keep your capital safe. Bye.